Hi, good evening. It's 12:04 a.m. here in Singapore, and as promised, I will share with you guys about the force break. And as I sharing my story, today's lesson is about force break. Okay, what is a force break in definition, and then I will also show you in the charts how it goes and what's the inside bar force break, what's a fakie, what does force break tell us about market behaviors, why do force break happens, where do these force break usually occurs, and how can we work on anticipating force breaks. Okay, so before we begin, right, I would like to say that most of these definitions can be found on NowFull's website, which is here. Okay, most of it will be here, but I will also share with you my own version, my own interpretation after experiencing the markets for the last 5-6 years. Okay, my own understanding. Okay, the thing is, let's go down to it now. In definition, right, a force break, right, can be defined as a deception by the market, a test of a level that results in a break of that level, but the market then retracts and does not sustain itself above or below that level. Okay, in this word, the market does not close outside of the level being tested, rather it leaves behind a false break always. So for instance, right, when you see when I first started off NowFull in my first year of trading, right, it's really a lot about reading, right, and I don't really understand. Okay, I don't really understand because it's too long-winded. It's like you will tell me, what's English was. Okay, so I'm going to define it based on my own terms. Okay, based on my own terms, so that you guys able to relate as to how I see it and a better understanding of it all. Okay, so I'm going to illustrate based on this first. Okay, let me just have to cancel some things first because I already do some earlier on just now. Just delete everything. Okay, before you understand, right, before you want to understand what is a force break, you need to understand what is a breakout and how you define a breakout. Okay, first let me just go to what is a breakout, how do we define or how we validate that is a breakout. Okay, let's assume market candles here, market candles here, market candles here, here. So in this case, right, is there any breakout? No, right? There's no breakout to the downside. There's no breakout to the top side. How can we validate this? Okay, how can we validate? It's based on closing prices. Okay, based on closing price. That means after candlestick closes, then we validate whether price breakout or not. Okay, like for instance, how does this, you can see this when you do a line chart. Okay, but if you do not do a line chart and you see on based on candlestick, what probably happen around here, right, in this one, what could probably happen is that there is a candle here, but there's a rejection. Okay, then followed by subsequent bullish candle, small bearish, and then price goes down. Then we knew that there is a resistance here, there is a supply here, and what happens here in this instance here is that let me just, when price open here, this candle open here, let's say there is a strong bullish candle here. Okay, very strong bullish candle here. Sorry about my drawing. And then the next candle, people expect, oh, there's a huge momentum, price should break out of this, assuming. Okay, but that is what most people do. Okay, we saw huge candle, we FOMO, right? You're missing out. Okay, the next candle, what happens? First hour it went up, second hour it went down, third hour it went up, and then the last hour price pushed down. The last hour, 1 hour it pushed down and then close bearish. So in this case, this is a false breakout. Why is it a false breakout? Because you see only wicks, you see shadow, wicks or shadows, I would say. Okay. So that means a false break are usually associated with wicks and shadow, and a failure of market to close past a certain level in the market. So false break, right? To understand false break, and that is called certain failure to close above or below the market. Okay, so in this case, there's a false break from on top. So when you know there's a false break on top in terms of buyers and sellers, what does that mean? It means that based on this candle, right, the buyers are strong. Okay, the buyers are strong. So the next candle, right, it's only natural that the next candle price just pushes up with that buyers momentum that's pushing from here. Okay, it's only natural. But as it goes into the key level, into this level of structure, right, price initially went up first. It did went up first, and this is where a lot of breakout traders coming in, right? Buy stop order, hoping for price to break out. But in the end, the last hour price break out in. So in this case, it's a false break, and that is how the definition of a false break means in this one. Okay, market does not close outside of the level being tested, rather it leaves behind a false break. That is a false break. Okay, and what is a breakout then? Okay, a breakout, I'm going to go back there. In this case, assuming, let's see, market goes up here, and in this case, when market rejects here, on top of our head, what we may think, okay, it's going to reject this demand to go up again and retest, or maybe break out. Because why? Double bottom. Correct? Alright. But then probably what happens next is that price goes down here, then maybe you say retrace, then price go up here. Said never mind, wait for a while, then in the end price goes here, and then okay. So now, if the thing is, if the candle is still running, this is haven't break out yet, yeah. But if the candle close, let's say the body close in this manner, assuming, okay, past this level with a rejection, either or lah, okay, either or. Let's say this is a bearish candle, okay, bearish candle, go down, it rejects, and then closes here, right? A bearish candle closes below, a bullish candle closes above. So a bullish candle close, a bearish candle close here. In this case, breakout is confirmed. How come cannot rhyme? Oh, no wonder. Okay, breakout is confirmed. Okay, because the body of the candle is out of the previous level. Okay, the body closes out of the level of this level of support. So in this case, the support has been broken, and usually what does this means, right? That is where we can take a sell limit, or you can go to lower time frames to look for price action signal for a retest of that broken level to rejoin this to go to taking into this downtrend. Can you notice that? From a strong here, we test, then become lower high, lower high, lower high, lower high, lower high, lower low. Okay, so that is how. This is what the market do every day, every time, right? I think you all will know. And this is what the market do. So the thing is, how can we prevent this? Is the thing, as I say, really observe the body of the close, wait for closing price, wait for the candle to close before you decide whether you want to take a buy or a sell. Okay, interpret the price action, and then decide on the momentum, and then see whether who is controlling the price, the buyers or the sellers in this case. Alright, if you see lower highs means the buyers fail to push the market higher. That's why it's called lower high. Alright, in this case it's the sellers in control. So if there's a breakout, which means when there is a breakout, which means there is an order flow. Okay, order flow for market to go down. When the order flow is seen, don't enter first, because market will usually retest to that broken structure. Okay, if market leaves without you, so be it. Okay, we do not want to sell. I mean, whether you want to take a sell here or wait for price to retest here, it's really depend on context. As long as your stop loss is above a previous structure high, you should be good. Okay, as I say, stop loss is where your trade idea doesn't make sense. If price break this structure and then went back here, then that means it's also a false break. Okay, so all you define based on what you see. Okay, so now I'm going to put it on the charts and let you see. And usually these false breaks, right, we can see it, like for instance, right, not assuming it is. Here, let's see if a H1 failed to break a previous support. Okay, which means that will be translating into a daily false break. It's a higher time frame false break. And usually, as I said, remember, a false break is usually defined as a wicks. You cannot see body. Alright. And then let me just try to illustrate it on the charts so that you guys can understand better based on this. I'm going to put based on pound yen. Okay, look at pound yen. This is the recent charts. This is charts now. Okay, like for instance, you see in this manner, right, price is consolidating after an uptrend, right? In this case, right, is the downtrend confirmed yet? In this case, hard to see because price is still pushing up, right? But we can see that the sellers are not in control. The buyers are not in control, sorry, because lower high has been formed and has been seen. Okay, and then price goes down here, and then look at this candle, strong bearish candle, right? Look at this strong bearish candle as it goes down. How does this false break form? I will show you. Okay, when this huge candle goes down, retail are looking to sell. Because why? They see big bearish candle, momentum is strong, look for sell. But it doesn't make sense because price will already go down. Why are you still looking? Why are we taking action after an effect has happened? Why? We should not do that. We need to validate it with price action. What happens here is that there is an order flow for market to go down. Okay, there is an order flow for market to go down. And I did say just now in my demonstration, once you see the order flow, doesn't mean you must take. Okay, after an order flow, price will always retest that broken structure. In this case, this order flow broke this previous support here or previous base here that has been lingering for 1, 2, 3, 4, 5, 6, 7, 8 days. Okay, if I'm going to put the level here, this is the broken structure. Okay, this is the broken structure level. This is the previous level in which price goes up. Okay, price goes up. This is a breakout. Yes, it is a breakout, but price could not sustain above this level for some time. As you can see, the momentum starts to decrease, and then price failed to close above that level. So this is a significant key level in the chart during this point of time. Okay, because it's a previous resistance, price break that resistance, and at this point of time, what people are doing, stand by at this to look for a buy, right? But if you go and look at your charts, price has been overextended uptrend. Okay, it's an overextended uptrend. So at this point, for you to take your buy is super risky. Okay, and especially after a big candle. Okay, so do not make that mistake. Okay, so back to here, and order flow is here at this candle, right? This is a false break. What happens here? Same story as what happened here. Price goes down here, people who look for breakout traders are standby here. They take a sell order here, price get activated, they get their sell activated, but then the sellers push the price back up. Okay, how is this formed? If I'm going, let's put here. Okay, so that you can understand how does this false break is formed. I'm going to go to the 1 hour. Okay, this is the 1 hour chart, right? Based on the one that I see. Look at this. Okay, price find support, price break support. Okay, and then people look for a sell based at that broken level of support, right? Price buy support, find support, push up, price break support, comes back to the support. Correct? Okay, and then there's a support here, right? Price break support, and still people are looking for sell despite H1 has already been oversold. Okay, and the first signs of how do you see the signs of false break, right? Is an overextended market, one thing, and market breaks out strong of a support. Okay, breakout strong. What I meant, if you look from here, if this is at this point of time, right, this is a support, right? Notice that how strong the market push out, strong push at this point of time, right? This strong push, right? Let me see. Okay, when this strong push happens, right, a lot of people are taking a sell because of they see this as a huge momentum to go down. Okay, but notice that as the market goes down strong, notice that how fast it went up. This shows that market does not want to stay here, and actually it's inside bar in H1. This is the mother bar, this is the inside bar, and then you see as price escape the top of this mother bar, which is confirmed by this. That means price breakout of the mother bar. It's a confirmed breakout of the mother bar. Okay, price breakout of the mother. In this case, does this breakout happens in this case? Since price went back here, that means this here, my friends, if I'm going to put this 1 2 3 4, this candle here, right, 1 2 3 4 5 here, right, in the daily, right, is only a week. You see a candle here in 1 hour, but in the daily is a week or a shadow. Hey, what are that one? See, it's a shadow. That is false break. That means a false break of a previous support. That's how false break occurs. Okay, then that is how false break is formed. Okay, clear? So you see in this case, price failed to break past this level. Okay, this broken support, broken resistance, turning new support. But does that mean this new support is going to bring this market higher? it depends. As I say, that market order flow is there. Order flow is to go down. This order flow, what significant does it do? It broke this structure of base. Okay, drop base drop. So it make a rally, it make a base here and it drop. In this case, this here is a false break. There is a false break here. Okay, there's a false break here. Actually, it retest this previous here. Okay, this we test here. This is the drop base drop. Okay, this is a minor support in 1 hour. Okay, this is a minor support in a 1 hour. Let me see whether can I see that. Yeah, here. Okay, here is a minor support. Price goes down, go up, does not go down further. It find a minor support here, then price goes up. Okay, so order flow here, it retests this broken structure, then it goes down here. So in this case, this is still a valid key level where market rejects. So when you see this, is the same thing. So when how I catch this, right, is the same thing. When I see this candle on Thursday, right, I said that something is not right. Okay, something is not right, because the candle is going down too fast. Okay, I don't make decision based on the candles. So I said something is not right here. So what happens is that I go to the 1 hour. Okay, I go to the 1 hour. So actually, once I see at the 4 hour, right, I see the 4 hour that there's an inside bar forming here. Okay, there's an inside bar forming here in the 4 hour. Then I ask myself, before this inside bar, what is the trend? The trend is downtrend. Okay, so when we see an inside bar, what can we expect? A continuation or a reversal, right? So I expect market to reverse. Okay, so in this case, we knew that there is a support here, there is a support here, there is a rejection here at this wick here. Until the body can successfully close out of this wick, then there is a confirmed breakout. If not, there is no breakout. That's why you see on my charts, when I share with you guys my entries, right, you can see certain levels, right? That's how I mark my levels. So I put the level here. Okay, so I see yesterday, when based on this candle, I ask myself, no breakout. Okay, no breakout. The body does not close out of the level, right? That means this is not right. And usually this level, you can see quite intersecting levels. I mean, price intercept. See, price make resistance, false break, goes down, false break, goes up, goes down, goes up, goes down. A lot of intersection level. So this is a good level. So when I see the 4 hour, I can see an inside bar is formed. Okay, and then when I see an inside bar is formed, that is where I go to the 1 hour. And then when I look at the 1 hour, right, okay, how do I enter this buy? If you look at the inside bar, before the inside bar is formed, I look at these candles. Strong sell, okay, strong sell candles, strong sell momentum candles, strong sell momentum candles, right? Not strong sell momentum candles, strong sell momentum candles still until here, until this push up, and then you can see the total reduction of momentum by the sellers. This is where I start to go in, because I know people are selling here, confirm. Okay, because people say it's reject resistance and go down. Market won't be doing that type of easy things. And besides, it's too low, price already go down. Why must I sell after an effect? So it doesn't make sense, which is why I enter a buy on a Friday. And this is how I entered, because when I see this as a rally. Okay, what did this rally do? This rally breaks this previous supply here that pushed this market down. So I knew that the buyers are in control now. what I need is a good pullback. This is the pullback. So in the 1 hour, price does not break any support. So in this case, this is how I entered the buy. Okay, this is how I entered the buy, and that is how it went up after that. So that is how false break happens. Okay, so that is how the false break is. Okay, so let's move on. However, you have to practice. You have to practice a lot in terms of finding key levels, and then market will always break. Market job is to break structure. Seriously, break structure, retest, break structure, retest. Okay, let me give you a typical market behavior. Okay, typical market behaviors. Okay, before we go to typical market behaviors, I'm going to show you something. Have you seen a market that does this? No, right? Unlikely. If there is, you can tell me. I want to go into this market. Actually, this kind of market is what we're hoping for the market to do, right? But it does not. Second, can you see a market just do this? Oh, there is, but not many times. But can you see a market do this? What is the similar about these three things? All is going up, right? Right not? But what is the reality of the market doing? It does not travel in a straight line. So this is how the market is doing in actual sense. Not much on this. This one totally don't have. Totally don't have. Okay. So how we do we anticipate for false break? Remember the order flow, remember the closing prices, remember the body of the candle. Okay, like for instance, in this case, how do we define the type of orders that we want to make in this case? Remember, the market job is to break structure. Okay, market job is to break structure. Market's job is to break structure, and then it is going to retest the structure, and then it will continue or it will reverse. That's it. That's it. Every now and then, every time, it's just going to do this. Okay. So I'm going to give you one example of this. Okay. The thing is, right, when we see this, okay, we see a market moving up. Okay, at this point of time, a market move here, there is no confirmation of an uptrend. We only see that there is a strong move towards the upside. At this point of time, price have not done this yet, and then market goes down here. Okay, market goes down here, and some people will buy here. Okay, and then they will get here, and then they will add some more positions here, and then most probably then price goes down here. And now in terms of candle, okay, let's just say we knew that this price is going up, and then this here, there's a support here as the sellers try to push the market down, but it's a support, market push up. What can probably happen here is that there is a candle here, there is a candle here that is formed here. Initially it went down first due to this selling pressure here. It went down first. After it went down, it rejects here, and then push up and close above this. That means this is a significant level. Okay, this is a significant level, and then it pushed, and initially it went down here, but it then went up. So this is a false break of a previous structure. Okay, it's a previous structure. The previous, in this case, right, a false. That means if price does not close here and it goes down here and close here, that means it's a broken structure. Okay, get that clear. So in this case, there is a broken, there is no breakout of low. Instead, price are rejecting lower prices. And the point when this candle is running, right, sellers did try to push the market down based on the sellers pressure. And breakout traders, standard, they still put their stop order here. They are lucky. After that, price pushes back up, and then they ask themselves, what the hell just happened? And this is type of counter trend move you don't want to take. Alright. Then when market pushes up here, this is where I knew that the buyers have come back. How can we determine this? As I say, closing price. Closing price, body of candle. Okay. Then price breakout. So in this case, we knew that there is a confirmation of a breakout. And then in this case now, okay, uptrend has been confirmed. So once uptrend has been confirmed, right, this is whole area is a good base. Why? It's a rally, base rally. That means a previous demand zone. And usually after a breaking of structure, right, breaking of structure high, this is where people buy, which shouldn't be the case. Our job is to enter on a retest, enter after a retrace. That is the best approach. Don't enter when the market is moving. Okay, that is FOMO. Okay, enter after a confirmation, enter after a retest, enter after you see a shift with momentum in your side. That is what you want. Those are the kind of entry that you want to make. Alright. Okay, and that's it. And then market goes up. So in this case, this whole freaking thing is a rally. This whole freaking thing is a base, and then this whole freaking thing is a rally. Rally, base, rally. And that's how it is. Alright. So for instance, right now, if we based on this case, in this case, right, what can we see from this? This is a drop, this is a base, this is a rally. It's a drop base rally in the 4 hour. Okay, this is where the base is formed. This is where the drop happens. And that is a drop base rally in the 4 hour. Drop, base, rally. In subbar, breakout. But does that mean that we can look to go for a buy? It depends. Just as how I explained here, right? If we knew that order flow, that market wants to shift towards the upside, we do not want to buy at this point. We want to enter on a possible retrace. What does we know based on this information that we have right now? We knew that this is a good demand zone in this case. Because why? Remember, as I say, if price rejected that level very strongly, right, that means there is a good demand zone there. So in this case, right, based on this information that we have, this is a good level. In this case, this is a false break of the daily. That means price does not break past this level in the daily. See? So as long as this daily is not violated, or body of the candle does not close past this level, right, we should look to go for long, irregardless of what happened here. Remember, this is effect. This is effect. This drop here is the effect. What is the cause of this effect? This supply here. Alright. Doesn't mean you see a drop base drop, price is going to continue drop base drop. No, right? Because based on price action, what we can see right here, right now, right, the sellers, the bias is strong. Okay, the bias is strong in this case. But can it go down once it reaches this supply level? Maybe. I wouldn't know. I wouldn't know. You have to look at what the information that we can see on the higher time frame. Alright. What is an inside bar false break? What is a fakey? What does false break tell us about market direction? Later, let me see. Okay, this is where I see now. Why do false break happen? Many traders become deceived because the market looks very strong or very weak, so they think it's a no-brainer to jump in with that momentum. Okay, however, the truth of the matter is that markets ebb and flow, and they never move in a straight line for very long. So if we look at this objectively, okay, from a daily, right, you must ask yourself, when price come to this level, why does it move very strong? Okay, if I'm going to mark a level here, that means at this level price move very strong. What does this level signifies in the higher time frame? Let's go and see. On a weekly, right, what does this signifies? Now the weekly candle is closed. What can we understand? What can I understand from this, right? It shows that price does not break any of the low candle. Remember, a breakout, that means there's no breakout, right? There's no breakout. A breakout signifies when the candle close past the previous candle low. Okay, that's a breakout. In this case, there's no breakout. Let me just write here. So my analysis for pound yen for the weekly is no breakout. Number one. Number two, inside bar false break. Okay, inside bar false break, right? This is the mother bar. This is the inside bar. Price went out of the inside bar. It travels into the mother bar, and it went out of the mother bar even. But then the sellers push this price in. Here, still remember, as I say, breakout traders standby. Okay, breakout traders standby to put your buy stop order. This is a could be a bull trap. It could be a bull trap. Because if you look from this candle based on structure, right? Based on structure wise, price is still up. Okay, based on structure wise, price is still up. Number two, price is still above the previous higher low. Okay, price is still previous demand. That means despite price being here, right, it doesn't have strong momentum to push the power to push this market down yet. Okay, at this current price action that we see. And once I see this, right, that means what I'm going to eye for next week is probably a buy. Okay, which the buy is to probably retest this level or break. It can be either or, because this is a level that has not been broken. Okay, to be fair, can it be an inside bar breakout to continue this uptrend? Maybe or maybe not. It's a lot of possibility, right? Now, based on this level, what does it represent on the monthly? If you look at the monthly level, right, doesn't this look like a previous broken supply turning into new demand? It does broke. At this point of time, price pushing up. Was there a breakout? In this case, there is. Okay, there is a breakout. See, there is a breakout. The candle did go past this high here. Don't talk about this, we just talk about this. Okay, this is the previous resistance has not been tested yet, but it's already gone out and break. And this is a retest. A retest of that broken structure here. Okay, so but it's still ongoing, so we wouldn't know. But this just look at the what information we can make do with right now. Okay, the last move that we can see based on the thing that we see on the charts right now, right? Based on the thing, you can see that price, the last big move is still a rally. This is a rally here, and this whole freaking thing is a base, so it can still be a rally base rally. Can still be a rally base rally before price goes down to drop lower, maybe. Okay, so that could what could probably be there. What we know that we know that there's an inside bar force break. We know that there's a force break of structure, and there's no breakout of lower prices. That means there is no order flow for us to look for a sell. Alright, there is no order flow for us to look for a sell in this case. Based on the weekly, based on the daily, we knew that there is also a force break of the previous support. Okay, the previous support level here, the force break here. That means that we can also put a level here. This close are open at this level here. Because in this case, there is a support here, and this one is a false break. This could be, yeah, as you can see here, right? There's a support here. You can see price get out of this level, and then price goes in, right? And then this, what is this candle here? This is a false break of the weekly, in which in daily you can see a candle, right? But in weekly you only see, yes, shadow. That means there's no breakout. That's how I define breakout. That's how I understand how is breakout. Actually, breakout means there's no shadow. Okay, there's no body, there's only shadow. Okay, so in this case, a false break. When I see this, I said, okay, that means it's a false break in a higher time frame. Yes, false break, higher time frame. False break in a higher time frame, and higher time frame always win. Higher time frame is always right. Once you have your higher time frame bias, then your job is to go into the lower time frame to find direction or price action signal that supports your higher time frame bias. That is how trading is. And right now, right, order flow to buy is there, but there is no retracement yet, or there's no pullback yet. So it's good for us to look for a retracement entry before we try to take a buy. We don't want to buy at high, right, as I say. Okay, we do not want to buy at high, or we don't want to sell at lower low. In this case, this is a lower low, and people are still looking for sell. Unbelievable, right? In this case, lower low, people are still looking for sell. No. Okay, that is how it is. So I already tell you an inside bar false break. How does it look like, as I explained here, right? Yeah, inside bar false break. Okay, so this is an inside bar false break in the weekly. Okay, in the weekly, this is an inside bar false break. The inside bar false break, right, which means, right, whether it does not escape the inside bar or whether it reject the mother bar, is still an inside bar false break. Why? Because as long as there's two candles, the second candle is within the mother bar, that is an inside bar. So in this case, it reject both the mother bar and reject both the inside bar. That means this zone here will be very, very significant for next week. That is the information that you need to know right now about false breaks, and that's how false breaks happen. And think about it, huh? Why you want to sell after price goes down? There is no order flow for price to go down. Where's the last higher low? The last higher low is here. That's the last demand. Why is this the last demand? Because this is a rally based rally. In an uptrend, as long as the base or the demand price does not pass this candle here, right, try not to look for a sell. Okay, try not to look for a sell. Like for instance, right, in this case, this is a strong candle going down, right? Strong candle going down. Where is the last demand? This is the last demand of a rally based rally, and this is a false break at the demand zone, and then price push up. Look at how market goes up. This is the order flow that prices want to go up. This is the retest of a demand zone, and that's why I say, right, if you miss this, don't worry, market will come back. Market will come back for even greater rewards. Understanding the order flow is always the best. Okay, like assuming this is the order flow. All right, order flow. This is a counter trend or a pullback. This is a continuation of the order flow to goes up. This is a pullback, pass into the demand. Order flow, pullback, order flow, pullback. You get the idea. I don't want to bore you guys with this stuff. Okay, the thing is, right, is it a good deal to buy here? 50-50. Why? Because the thing is, right, there's no price too high for a bull market. and there is no price too low for a bear market. Okay, just like this. How ridiculous is this move compared to this move? Okay, and there is I mean the from here, right, we're going to also see that this before this market doing what it is, right, it's on a massive downtrend, in which price broke out of this channel here. I don't use channel sometimes. It just, I just do it just to add confluence into my analysis. Okay, in this case here, where is the point of breakout in this case? Okay, I will just going to put on here. Okay, I'll just put it here. I never really adopt channels, alright. But once it broke out the channel, right, usually it impends into a trend direction change. Okay, so price can still go up. That's what I can see from here. Even you see from the bigger time, even from this bigger time frame, what is the last big move? It's a significant rally, very very significant rally. And after that rally, what is this whole freaking thing? Actually, is a base. This whole thing here is a base. So what can possibly happen? It can still be a rally base rally. Is there a rally base? People say, oh, the drop haven't happened. The thing is, is there a drop in the first place to suggest that this might go down? No. Previously, yes, of course. Here, yes. After every drop, counter trend, price goes down. Counter trend, price goes down. Counter trend, price goes down. Counter trend, price goes down, but does not break this low. That means trend change, significant demand right now. Okay, that's where drop, base, rally, base, rally, base, rally, base, rally, base, rally, base, rally, base, drop. So it just doesn't make it doesn't really add into context to sell. Based on the price, is attractive to sell, but based on the trend and the structures, right, it's a bit worrying to sell. Okay, when we knew that the buyers are still guarding this area here, and you should know how weak is yen. So for me, the thing is that if price manage to successfully close past this level here, then it could travel up to the next key level. Okay, this is a previous key level here. Okay, it's a previous key level. The next key level that we can see from here should be from around here, the 160, which is around 400 pips away. Okay, so that's how I define false break. Fakey is okay. I think fake that. Okay. So just left fakey, okay. Some of this already I explained to you guys. Fakey is where inside bar, the body of the candle close out of the mother bar, but then the next candle open, right, price close within. Okay, but usually a fakey, right, is quite instantaneous. Okay, it's quite instantaneous. What I meant by instantaneous, let me give you an example of a fakey. I think the faking, sometimes you can find it. This is a fakey here. Okay, in this case, look at this. This is an inside bar. Okay, this is an inside bar here. This is the mother bar. This is the inside bar. Look at the next candle at the body close past the mother bar open and the mother bar high. Okay, this. Okay, at this point of time, people are saying price is going to break out. The next week, what happened? It did went up, but other than close within. Okay, that means a fakey has happened. Once a fakey has happened, right, does not mean that you have to go straight away. Price sometimes would retest the fakey level here. Okay, before, so a fakey, when you see it happens, right, it tells you that a big move is coming. Okay, when you see a fakey form, right, a big move incoming. And in this case, right, this inside bar, right, of course, when the inside bar is formed, it can be a continuation or a reversal, right? In this case, if it goes up, that means a reversal of this downtrend. Okay, but if it goes down, that means it's a continuation of this downtrend. Drop this, drop. Okay, that's what inside bar is. And this inside bar fakey, and this is even better. Inside bar fakey after a push up with an engulfing, even more better for us to for sell. Okay, remember the best engulfing candles, right, are the one before it, right, buyers push up. Because what is this telling us is that the buyers are gaining a lot of strong momentum, and this third candle is where a lot of retails are going in. So as the retail start to go in this case, right, their buy orders get activated, and when price goes around this, they put a lot of orders, a lot of orders, and they say that it's price breakout, but actually it's a false break. Okay, in this case it's a false break because the body failed to close above this level, so it's a false break, and it closes engulfing. And still remember when I tell you guys, the one is the best approach to for engulfing, 50% of the engulfing candle, 50% of the engulfing candle with stop loss above the previous high of that engulfing candle, and you should be good to go. But this is a weekly. Okay, I mean the weekly, the pips is crazy, so you have to go lower time frames in order to narrow down your pips. Alright, so that's a fakey. Okay, so how can we work on anticipating false break? Backtest. That's what I'm showing you right now. Backtest your charts. You need to understand how it's formed. Okay, apply and review your processes. No, usually a false break will happen, right, after a market is overextended. Okay, after a market is overextended, usually a false break will happen. Okay, like for instance, right, okay, like instance, okay, look at this market uptrend, right? Look at how high is the uptrend. In this case, right, it seems like the market doesn't want to go down, right? But it's actually, as I say, it go up and go up and go up. But it can be, this is when market goes down, goes here, right, and then suddenly goes up here, right? This is signs that, what to me, right, when we see this, right, is a flag that the big boys are looking to bring this market down. They're just looking for liquidity. Okay, after that it will bring down. So in this case, right, there's this one should be a false break of the monthly, if I'm not wrong. I mean, you don't see candles here. There's candles here in the weekly, but in the monthly, right, we shouldn't see any candle. Okay, this candle here, there's no candle here. In the lower time frame, right, we can see a candle here. Let me see now. Is it here? Yeah. So in the 1 hour is too far. Oh, it's too far already. I can't see. Okay. So in this case, right, there's a false break here. This is the false break. A false break of the previous candle. Okay, no need to go from here. As long as it's failed to break above the previous candle high, that is a key level, which means this is a key level in the market. At this point of time, this is a key level. Price fail one time, price fail two times, and then price fell 3 times, and then that's it, it went down. Okay, so understanding levels is important. Like for instance, in this case, price goes down here, make a level and go up, right? I mean, this is a significant level. After this one push, market push up quite significant. That means price is escaping away from this area here. That means there is a significant demand here. There is buyers here, in which it will be tested in the future. See, it tested. Okay, and then as market goes up here, we can see here that markets consolidates and then it went up. Okay, as it went up, you can see market has gone to a significant level that has been broken in the past. Okay, this is the previous drop base drop, so you can see that we test this previous drop base drop here, so you can still go up. So false break is all about finding out your levels. Okay, finding out your levels, then you can understand key level. Don't put too many levels until you cannot see where the market is going. Okay, remember, market job is to break structure. Okay, if there is no structure broken, there is no order flow. In this case, there's no structure low. That means there's no order flow for a sell yet. In the weekly, is there a structure low? No. In the daily, is there a structure low? In this case, no. Why? Because there is a false break of the previous daily candle. Okay, in this case, right, so should we mark the wicks or should we mark the body? It depends on how you see it. Okay, it depends on how you see it and how you apply it. There is no one size fits all. Okay, there is no one size. Just know that there is a significant push, meanings, right, there is something that is stopping this market from going down. Okay, there's something that's stopping this market from going down, and that is the level, and that is where we know that right now, right, price may look to go up based on these rejections of this significant key level here. Okay, and just wait for a price action signal. So the when I see this thing, once I mark my levels, once I see the order flow, right, my job is just to wait for retest, wait for good price action signal, and to go long. That's it. Why should I even care about a sell? Price already went down. That's good about supply and demand. Buy low and sell high. Easy to talk, not easy to do, right? Alright, so that's how it is. So I explained to you guys within the best of my ability about how to anticipate false break and what can you do. Alright, remember the key takeaway, right? A false break, key takeaway is body of the candle must close past that level. Okay, body of the candle must close past the level. That is a breakout. So understand how is a breakout defined before you can understand how is a false break defined. That is how we do false break. That's how false break happens. Okay, at the end of the day, it's all about, that's why I like to put myself, right, trading is all about understanding buyers and sellers. That's all. What is the job of buyers? Higher high, break structure high. What is the job of sellers? Lower low, break structure low. When the sellers fail to push prices lower, that is where the buyers come in. When the buyers fail to push prices higher, that is where the sellers come in. Once you know that happens, go in line with where the market want to intend to go. That's always been done. That has always been the thing. Alright, so do a lot of practice, and I hope that I not so long-winded on this. Okay, do a lot of practice, and then if you have any comments or any questions, you can DM me, and I'll try my best to answer and get back to you within the shortest time possible. Because on this topic is one of the followers who tell me about how do I define sub-bar false break and how it is. So this is how it is done. So you can share with me certain things, okay? But don't ask me things. Bro, why did the candle turn bullish? I mean, is that even a question to ask? Alright, you must make something that, ask something that is makes sense. Ask something that is in line with what you want to trying to achieve, in terms of technical, in terms of price actions. Okay, don't ask things that has out of context. That's got nothing to do with what are you trying to achieve. Okay, And that is all I have to say from here. And thank you for listening to me, and I will stop right here right now. Cheers.